The Ministry of Finance and the Public Service presents Let's Talk Finance, a feature exploring the various elements of the economic program.
Welcome back to Let's Talk Finance here on Nationwide at 90 FM. My name is George Davis. My guest this week, as he was last week, Acting Principal Director of the Fiscal Policy Management Branch in the Economic Management Division of the Ministry of Finance and the Public Service, Trevor Anderson. Trevor, welcome back.
Morning, George, and morning to your listeners.
All right, let's look at labour market developments now. I think it's a natural pickup from where we left off last week. And speaking of pickup, the Statistical Institute is reporting that for April 2018, they have registered a pickup in employment in the country to the extent that the unemployment rate has fallen. Yes. We spoke last week about BPO and how that sector was adding jobs. But for the overall labour market picture, is BPO the only area that jobs saw that added a significant number of jobs in the review period?
No, the growth in employment would have been across a few subcategories. So, for example, in the motor vehicle and equipment category, the increase in employment there, 13,300 persons. In agriculture, hunting, forestry, and fishing, that incidentally had registered a decline of 11,000 persons. So with increases and decreases in the various groupings,
yes,
we still came out ahead in terms of a net increase,
yes,
in employment. So, you know, it remains a positive picture, and it represents a continuation of the trend that we have observed in recent times based on the data put out by Statin.
Yeah. I'm looking at the graph in the fiscal policy paper, which tracks
Yes.
the unemployment rate for the period April 2013 to April 2018. And I'm remembering these days, it was not so long ago, April 2013, 16.3%, the overall unemployment rate,
Yes,
compared to 8.4% at the last time Statin reported. So this gradual fall, Trevor, is it down to happenstance or strategic planning that is bearing fruit?
it's a combination of those things you mentioned. And in terms of the latest unemployment, George, of 8.4%,
Yes.
One of the things which would have contributed to that, yes, we have growth in certain categories of employment, but however, of note, for the latest unemployment report, there actually was a decline in the labor force.
Yes.
And if you think of how the labor force is defined, it's made up of a number of persons who are either employed,
Yes.
or who are actively seeking employment.
Yes.
And the latest data put out by Statin indicated that there was a decline in the labor force, which,
Yes.
of course, if your denominator is falling, then your overall unemployment rate, given a certain employment level, will also fall.
Yes.
So investigations are going to be taking place to try to get to the bottom of why is it that a certain grouping of persons, particularly women, actually withdrew from the labor force. Anecdotally, some of us would maybe want to think that, well, maybe they're getting resources from other areas,
Yes.
including us, the men,
Yes.
or because remittance is flat.
Yes.
So it requires investigation as to why persons would be withdrawing. Is it that their qualifications and the commensurate remuneration isn't sufficient to hold them?
Yes.
These are things that we need to explore.
Yeah. issue of the monetary developments in the June 2018 quarter,
Yes.
BOJ says it maintained its accommodative monetary stance. Now, where monetary policy is concerned, everybody has an opinion. If the exchange rate goes north, everybody has an opinion.
Has an
Everybody's
opinion.
screaming and everybody's saying the sky is going to fall in.
Yes.
The BOJ and EPOC, through its co-chairman Keith Duncan, they've been saying that, look, the accommodative monetary stance is adequate for Jamaica. It's ideal for Jamaica under the conditions. That's what we're pursuing. Define that for me. Accommodative monetary policy.
Okay. Accommodative monetary policy is really a situation where the central bank's tools are not being used to reduce liquidity. And so if the stance is accommodative, then what we will find is a central bank would be reducing its various liquidity requirement for the financial institutions,
Yes.
the liquidity ratios, its own signal rates, benchmark rates would have been falling over time. And so if you have interest rates falling in a low inflation environment, you have a central bank which is not seeking to increase interest rates. Okay, that's the key.
Yes.
If interest rates are falling, you are in an accommodative stance period. The various requirements for the financial institutions to hold certain amounts of their working capital, whether in cash housed at the bank
Yes.
or within their tills, all of these things contribute to the stance of the central bank. And so the central bank has been in this accommodative stance now, certainly since 2013.
Yes.
And it has all gone well for the sustained reduction in interest rates, as evidenced by the fall in the treasury bill rates.
Yes.
So, what this has done, it has created a positive bounce to the individuals who wish to borrow. Individuals or businesses which
Yes.
need to borrow from their financial institutions. The hope is that as time goes by, the commercial banks will pass on these savings.
So money becomes cheaper to
Mon-
access.
much cheaper. Yes.
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 So all right. I'm going to ask you this one directly then, because, and again, the question is a function of the sentiments expressed by many people when there is turmoil on the foreign exchange market and the rate goes up.
Yes.
Basically, then, it is not true that if the exchange rate, if it costs more to buy the US dollar, that is a sign of bad fiscal management. And if the dollar, if it costs less, then that's a sign of good good monetary policy, good management by the BOJ, by the government.
Yes.
I'm just putting it like that because some people make it seem as if it's linear. Exchange rate appreciates, bad management. It depreciates, sign of good management. And if it doesn't depreciate, it means you're not doing a good job managing the monetary aspect of things. Let me hear you on that.
All right. We're in a flexible exchange rate.
It's a flexible exchange rate regime.
Flexible
Yes.
exchange rate regime.
Yes.
The bank is moving, as has been announced recently, towards inflation targeting.
Yes.
You can't seek to control both inflation and the exchange rate at the same time. The bank has, after much consideration, decided to go for inflation targeting.
Just before you go further,
yes.
just explain why you can't do both at the same time. Because I think there's a lot of confusion is there.
Okay. If you go for try to control the inflation, think about it. If inflation is indicating a spike, the traditional tools will now need to be employed to squeeze liquidity out of the system.
Yes.
If you're going to be squeezing liquidity out of the system, it means you're going to be creating liquidity shortages.
Yes.
That pushes interest rates up.
Yes.
And as interest rates go up, compared to what's happening on the international capital market in other markets, such as the U.S. market, persons can then decide whether they want to send their dollars to Jamaica to earn this higher premium because interest rates in the U.S. now are low.
Yes.
So if you have very high interest rates, you're going to have significant capital inflows. And when these come in, they are normally termed hot money. When these flows come in, they will create a downward pressure on your exchange rate because more dollars are coming in.
Yes, more available.
However, once your inflation comes back under control, you're going to be lowering interest rates. And as you do that, the hot money moves out. The consequence of that is that a shortage is created, a higher demand in the short run for foreign exchange, for it to be exported or repatriated.
Yes.
And so the exchange rate shoots back up again.
Yes.
So you have to decide which one you're going to be targeting over the long run.
Yes.
Short-term changes in the exchange rate can reflect what's happening in terms of domestic market conditions, or it can reflect what's happening to what we call the real exchange rate. Now, if it is something to do with short-term demand conditions, I mean, the bank can decide to sell foreign exchange, or, as it has been doing, the bank has reduced its surrender requirement where foreign exchange is concerned to the dealers of foreign exchange. So more money is allowed to be kept by the dealers. Hence, there's less need to really turn to the central bank to say, hey, we have a shortage, pump some money in.
Yes.
The market can comfortably, more or less, take care of itself.
Yes.
So the central bank buying and selling foreign exchange notes through its BFIXit.
Yes.
These represent a much improvement over the previous system. So, as I said, you have to decide what you're doing.
Yeah. Can't do both at the same time.
Can't do both at the same time.
Trevor, let me ask you again. What is, and pardon the question, it's for the information of others.
Yes.
What is a stable exchange rate? Does a stable exchange rate mean an exchange rate that doesn't move any at all? Or is it a stable rate that it will move within a band? What is stable? Because I think there is, again, confusion where that is concerned.
Okay. Most persons associate stable with being fixed.
Yeah.
We're not in a fixed exchange rate regime. We're in a flexible.
Yes.
And so the rate must go up and down depending on what's happening to either domestic market conditions or trends in the real exchange rate.
Yes.
So remember now, we need there's a real exchange rate which indicates your competitiveness for your exports.
Yes.
And the central bank keeps an eye on that.
Yes.
So that's critical.
Yes.
Yes.
Yes. Very well. We're at the end. Sorry we didn't have more time to go through that because, that's a point that needs to be emphasized. What's the difference between stable and fixed? They're not synonyms, people. You can't interchange them. Stable is stable, fixed is fixed. Trevor Anderson, thank you very much for your time.
Thank you, George.
Good. That's it for Let's Talk Finance this week.
That was Let's Talk Finance, brought to you by the Ministry of Finance and the Public Service.